Welcome to another episode of Talk to Tatiana. And today, this is Tatiana Sawyer. I'm talking to Chris Picciuro. Chris, welcome to the show.
Thank you so much for having me. And I'll confess that I also listen to the show. I've been very entertained by the episodes, especially the ones about pissing off your accountant.
That's what we're here to do because there's a lot of accountants. Accounting enrollment is falling, which means that there's going to be less and less professionals doing what needs to be done. And so we're kind of bringing life back into accounting profession and also making it fun for everybody else to listen in. So before we dive into kind of how to piss off your accountant, talk a little bit about what you do, where you are, what your specialty is.
Absolutely. Well, again, thanks for having me on the show. It's an honor to be here. It's always an honor to speak to the accounting community. I currently reside with my family in historic Franklin, Tennessee. For those of you that don't know, we're about 15 miles south of Nashville. And we've been here for 7 years. I grew up just northeast of Detroit in Mount Clemens, Michigan, which became Clinton Township. So I spent about 40 years there. And my wife and I decided that that we wanted to find the best place in America to raise our children. And we feel like we did. We love it here in Franklin. Tying back into our subject here, I've been in practice for over 20 years. And because we were able to niche down into a specific industry and change how we operate our practice, that really enabled me from being someone that happened to have clients based on my geographic location to collecting a great book of clients based on our industry specialization. So we're here in Nashville. Love it here. And also, so our CPA practice, our private CPA practice is made up of real estate investors and some entrepreneurs. And like yourself, subscription based on the private practice, focused on tax planning and strategy. Now, it hasn't always been like that. We've been this way for about 8 years. So first about 12 years, I collected a lot of information about getting pissed off about certain situations with clients. And that really led me, though, to take my life back and make sure that I'm there for my children, I'm there for my clients, and I feel fulfilled with what I'm doing.
I love it. That's exactly how it should be. I think there's too many accountants who are killing themselves for clients who would switch over to somebody else in a heartbeat. And I'm happy to hear that you've made that switch. That's awesome. And so your specialty is real estate investors and entrepreneurs? Is that right?
Absolutely. Most of our clients, I would say 90% are real estate investors. Some of them are also entrepreneurs. Typically, they've had an event where they either were an executive or had a successful business, and a lot of times they're looking for some real estate and some alternative ways to grow wealth in a tax-friendly way. And sometimes the real estate takes over and they sell their business. But then sometimes we have some entrepreneurs that are looking to get into real estate. And pretty much, but mostly I would say real estate investors. Typically, our avatar is going to be someone that has been investing for a year or two already and has a small portfolio and really looking to grow it.
Awesome. Love it. And okay, cool. So let's dive into how to piss off your accountant. And so I'm curious to know, we talked a little bit before the show started, and you mentioned that you don't have much of those issues that most accountants face, right? But at the same time, you've ran your practice for 12 years before you've switched over. So let's talk about something that really pissed you off or pisses you off now when clients do.
Exactly. And if it weren't for the things we're going to talk about, for those of you that are watching on YouTube, I might have a hairdo still, but that's all right. I would say probably the biggest thing that pisses accountants off is clients not understanding that tax planning and strategy is separate than tax preparation. Those are completely separate value propositions, and they're not. And as accountants, we can't let the lack of planning and lack of strategy upset us. Like we did something wrong. If someone comes in with their source doc, well, hopefully they're uploading to the portal. If you listen to the couple podcasts ago, which we are all virtual as well, but hopefully once they submit their documents to you and they have a certain amount of result on the tax return, if they're upset at you, or you even think to take it personally when they did no tax planning or strategy, don't feel like that. And unfortunately, I feel like the accounting community does feel that way. And then at that point, there are a few things you could do post year end, but ultimately the hay is in the barn. But that really pisses me off when we have that situation. And again, fortunately, on our private CPA practice side, we don't. But I think a lot of accountants come in and they feel bad for clients, like they owe all this money. A great example that happens is, well, I sold this property, and but don't worry, I did a 1031 exchange, but I did my exchange. I just paid off my mortgage. It's like, well, no, that doesn't work. Okay, paying off debt. I'm not saying it's a bad thing. Is not a tax deduction.
Oh my God, that's a good one. I agree totally. That sounds, it actually is funny, right? If you think about it, people do think that way, right? And also with the 1031, your accountant has to be involved, doesn't he or she?
Absolutely. The accountant should be notified immediately when you're even thinking about doing a 1031 exchange, and then you bring in a qualified intermediary to assist with that exchange. But again, now I'm going to go down a little rabbit hole, because some people think I can just do my own 1031 exchange. I personally did a 1031 exchange last year, and I could never take custody of those assets, excuse me, or else I would lose my tax deferral.
Yeah, but people try to do that all the time. The stuff is sometimes that people ask me. I mean, thank God they ask. But
Mm-hmm.
it used to be that people would do stuff, and then after the fact, they would tell you, "Oh, by the way, I had a client just last year. I think I saw a picture of her on Facebook. I think or something that she like gave birth to a new baby. This was like March or something, or February. Um, or no, that was actually like a new baby, new infant, whatever. And I was like, when was he born? And she said, oh, last year November. And I'm like, when were you gonna tell me about this?
Mm-hmm. Exactly. And that's where, the old school way of it used to piss us off when we'd print out those stupid organizers and mail them out to everyone. And I know come back blank, but we use an online organizer, and we've designed it to be 10 minutes or less. And just picking up on those big things. But we had in one incident where someone had a dependent after the fact that the return was filed and didn't put it on their organizer. Or a good one is, well, I think another thing that would pisses us off, which I think is that taxpayers assume that you and I, now, do we have a practitioner line to the IRS? Sure, but we get hung up on too. That we know everything that happened. We know every quarterly estimate they made. I wish we did, but we don't have a crystal ball. We may have set you up with quarterlies, but we don't know when you paid them or when you didn't. That kind of honks me off too.
Yeah, yeah. I mean, typically in my practice, we make the payments because it's a concierge service, so we make the payments for the clients usually
Mm-hmm.
with their permission. But because we have access to all the accounts and stuff, so it's no brainer. But yeah, it's actually interesting. I've had clients a number of times who get a refund, and then they're like, "Why did we get a big refund?" And I'm like, "Did you tell me that you made a payment?"
Mm-hmm.
No. Well, that's your answer.
Absolutely. Well, thank goodness. Well, I'm gonna. There's something else that pissed me off. Thank goodness we don't have to deal with it now. And a lot of our clients didn't really obtain this, but that advanced child tax credit was a pain in the rear. If I have to reconcile that was just awful. That was awful. And the
It's
economic impact payments. It
yeah.
was a nightmare.
Yeah, it was a nightmare, and I'm so glad that this year was over. Because people who were like, "Yeah, we got it," and then other people were like, "Yeah, we didn't get it," and then they were like, "Why was my refund lower?" And I'm like, "Oh my god, if I have to do this for every client." I mean, thankfully, I don't have a lot of clients. I don't know if you know this, but on average, there is 900 as of 9 years ago. This is data from 9 years ago, but there's an average of 916 tax clients per accounting firm, including one-person firms.
Wow.
Um, right, I work with about 45. But the idea is that if you're one of 916, like, imagine having to deal with all of that.
I mean, that is not, and that's kind of ties into that we don't have a bat phone to the IRS. We can't, and now obviously concierge service, you might be able to log into their account, but in general, if you tell me you received your economic impact payments, we need to know that. But I'm just happy that's gone. I have another one though, on kind of a cousin of that. When clients don't understand that taking a subsidy for their health insurance is something you might actually pay
Oh.
back. And I had one incident, and again, 99% of our clients are not getting a health insurance subsidy, but in general, I had one client that I don't know why she didn't call, but she went to get health insurance, and the uh, she's an S corp, took a modest salary, reasonable compensation, of course, but that wasn't that much. And the health insurance advisor told her, "Well, it's based on your W-2 wages, not your K-1." And holy moly, she owed back $18,000 um, of subsidy. And excuse me, we tried what we could. We ended up getting that down a little bit by doing some post year end planning with cost segregation studies and stuff. But again, same situation. It's not free money necessarily.
Yeah, and I wish we could explain it. I feel like, it's on us as accountants to explain it to people, but at the same time, sometimes they don't ask, and so we don't have an opportunity to explain.
Mm-hmm.
And they apply for these things based on prior years numbers, right? And then I mean, I also don't have a lot of clients, but I also have clients who have, let's say, a partner who's unmarried partner in the home with kids, and she applies for the health insurance and she doesn't know any better, and then they have to pay back thousands of
Mm-hmm.
dollars in health insurance subsidy. It's crazy.
Oh, can I throw? I got another one. Here's a good one.
Let's do it.
I think when you don't know if you should be claiming a dependent or not, let's say you have a divorced couple or an unmarried couple with children, and you're like, well, even years I do this, odd years I do that. Now, obviously, if it's a client that you've had for a long time and you know the proper onboarding procedures, you're going to ask for that documentation and review returns, prior year returns. But that one is always like, oh well, it's like or when a client's return gets rejected because the other parent claimed that the child behind their back, but they think you've done something wrong. It's like, what do you can't file a return with the two social security numbers the same, dependent. So
I
that's
think it goes back down to the this most basic concept of the fact that as a taxpayer, taxes are ultimately your responsibility.
mm-hmm. Absolutely. And sometimes I tell clients, I was like, yes, if I was a personal trainer, you can come in and we could work out. But if you go home and eat 50 Snicker bars, well, you've just thrown away everything we just did. I could still be your buddy, but you're not going to get the results. I mean, ultimately, yes, taxpayers are ultimately responsible. And again, you have a concierge service, so you do a lot for your clients, but they still are responsible for, ultimately making financial decisions. And so, yeah, gosh, I'm just thinking now there are so many good ones think about vehicles
Oh.
and like how many times you would an accountant have a client come in? Yeah, I bought a new car. My payment's $400 a month. Okay, great. Did you trade one in? But I paid cash for it. So is that now we got bonus depreciation, but one of the things we teach is tax flow and cash flow are different things. But I love it when you get a payment on a vehicle and that's all. It's like, great, thank you.
Oh, it drives me absolutely crazy. And also, like, people, like, I have one client like that who is very jumpy. Not
Mm-hmm.
like, not like in a bad way, but jumpy, like very decisive, very like, okay, let's go, let's do it, let's move forward. And oh, I need a new truck. Okay. Just went and bought a new truck, and like 2 weeks later, I find out that he bought a new truck, and I'm like, well, you already,
Mm-hmm.
like, we've been working together for 5 years. Like, why are you not sending me the closing document, the purchase agreement or whatever with sales price, the financing, all of
Mm-hmm.
that? Because we don't deduct the payments, we deduct the full amount, and depending on what it was and how and everything, do we have an ad back? If it's an SUV, do we have this or that? Like, is it a lease? Is it a finance? Like, all kinds of questions like that people don't even think about. It drives me absolutely crazy. Like, this one guy, but he's a great client. So kind of have to teach him and have to remind him, which is fine. I'm a concierge accountant, so I get compensated for that babysitting, so to speak. But It's kind of like babysitting, right? People do this type of stuff and just go and buy and on their business, and they don't put it on commercial plates or whatever, like all kinds of stuff like that.
Right. Yes. The classic one is, well, my well, this kind of, I call it getting tax advice from the bar stool. My buddy deducted, my buddy's wife deducted the cost of her nails. I'm like, okay, good for her, I guess. Have you looked at their tax return? Or that doesn't make it right. And maybe, who knows? Maybe she's a nail model. Maybe she's a hand model and she could deduct it. I don't know. But when
I
these guys, I don't know if you've had those situations. Maybe not I just made that one up, but I'm just saying that the if I've got a client that golfs, I never call them after 3 p.m. because I guarantee you they're out golfing with their friends and discussing what tax deductions they came up with.
Ugh.
Man.
You know what really pisses me off? Although it doesn't happen often, happens every once in a while. But like, uh, most of my clients follow me on Instagram, and then they would send me a video from another accountant on Instagram. Are we doing this? And I'm supposed to, like, what am I supposed to do? Like, spend an hour of my time watching this video so that I can give you no, like you got to pay for that. Like, and trust me, and this is the same guy, by the way, with the cars and the trucks. He's like sending me stuff on Instagram, and I'm like, listen, the fact that I didn't offer it to you means that I've already thought about it, and it doesn't apply to you right now. Once it applies to you in the future, then we'll talk about it.
That's happened to me a couple times. And sometimes it depends on the person, but if it's habitual, then I just have to say, look, you obviously don't trust us. So maybe you should, we're not the best fit, but we don't want to be in the business of losing clients, but that does upset you. Or the better one is, hey, go pay your kids, to do nothing. And now we do have clients. Income shifting to family members is a strategy we use if it's legitimate work. And we do have people that have children that do legitimate work. But the best one is when your client does something like that. And then you say, yeah, we talked about that 6 months ago. You didn't want to do it. Oh, wow. Okay. So that's all right. But yes, I agree. A lot of these with social media, there's a lot of tax advice. And that's probably number one on my list. And we have a proprietary process, but we go through a process of diagnosing a client situation, prescribing a strategy, and then implementing. Well, the number one thing that would piss me off is people wanting a prescription or getting a prescription from someone that's never done the diagnosis. And your clients and our clients pretty much know we're diagnosing them all the time, as far as from a tax perspective. But, actually, I have another one now. I'm kind of on a roll. This one we've pretty much weeded out, but how about the people that call to get a status of their tax return but haven't submitted their documents or done or all their documents? Like, I will trust me, the last thing I want is your tax return in my task on my task list. We would love for this to be done, but I don't know.
Yeah, I mean, I don't get that a lot. And it's interesting. My firm, we work with a very small number of clients because we don't want the client to be one of 900. We want them to be one of 50 or max. And there's a reason for it. But the idea is that for the tax return stuff, like, I don't know what you use for practice management. I happen to use the one that has a lot of automations, and especially the one that has automations like when you like pipelines, the one that says like, not started, moving into prep. It sends an email to the client saying your return is in prep. I don't want them to know that it's in prep. I don't want them to know when I'm working on it, because I don't want them sending me messages saying different things. Like, I already have everything. We're a concierge firm. We have access to the majority of information, especially for business. And so we don't want to ask for extra stuff. And we also don't want you to bother us. And people don't want to be bothered either, because when they see a message like, oh, your accountant sent you a message, they're like, oh my God, what's going on?
Right. I mean, we're not Domino's Pizza. You don't need a status every time a topping gets added, Yeah. I know. So in our practice, we have, at my largest point of practice, we're at about 8% of the amount of clients that we had at that point. We're very boutique also. So a lot of these things we don't run into. And what we set is an expectation. I mean, our expectation is 10 business days turnaround from the time we have all of the documents in an orderly fashion. That's pretty aggressive, but we realize the hardest part of the tax preparation side is just getting the information, and then we can organize it and pop it in. But I agree with you. You don't necessarily want your client to know. Maybe you want them to know it's in the queue, but they don't need to know every, like, hey, Schedule C has been updated. Like, and then they're like, oh gosh, where am I at?
Yeah, they don't need the, and honestly, like most of my concierge clients, they don't really care. They got lucky because I'm someone who's a very high ethical standards, and they trust me completely, and I take that trust very seriously. But and most CPAs are that way, but of course there's bad apples everywhere. But um they don't really care. They trust me. They know what's going on. I urge everybody to review your tax return because you are the one responsible. I explain everything we do, and I think that's what's been helpful. I don't know what your experience has been, but for me, explaining kind of why we have what we have. Typically, I don't know about you, but we typically have, and this is my personal choice, or I guess desire. I don't want to have a situation where a client in March gets surprised by a tax bill. So we typically do strategic reviews throughout the year together, where we make the payments for the clients usually, and we review where they are, so that when tax time comes, it's the culmination of a year's worth of work when we just file and there's maybe a little balance due, a little overpayment, kind of here and there. Obviously, not considering something like the pandemic,
Mm-hmm.
when some of my clients were getting like $50,000, $70,000 refunds because they've paid up to have money for the year, but then their business like really went down, and they ended up not paying. But tell us a little bit about that experience in your firm.
Absolutely. Excuse me. Well, one of the things we teach is that your tax return is a verb and not a noun. And then once you have that mentality, then it gets easy. I would agree 100%. The reason we don't even use I'm stuck the B word. We don't use busy season. We don't use the D word, done, D-O-N-E, meaning those are four-letter words in our practice. Your tax return's it's not done. It's completed, but it's going on all year round, just like you're saying. So what happens is when someone only addresses their tax return situation at one time, it creates stress for them, and then they deflect that stress onto their preparer, and it sends us over the edge. That's why we don't have enough people coming into their profession. We need more people coming into this profession. But so we try to do that as well. It's the unknown. Like if a client in March knows they owe $50,000, that's okay. They just need to know that, and they might be happy, they might be sad. But we have already addressed what they could do, what they should, how to handle it, what their options are. So that really is what's most important, and we focus on that as well. So yeah, unrealistic. I mean, when someone doesn't know where they're at, that creates stress, and it could be a
Yeah,
bad thing or it could be a good thing. And that's good that you're focusing on that, because I could fix a lot of stuff in advance, but you can't fix everything after the fact.
yeah,
And
yeah,
it does take cooperation. You're talking about how little preparers we have per taxpayers, and we really look at our clients as a partnership. It's and not a vendor relationship. They're our partners. We're their partners, and that's what you know, that's been really good. But it wasn't always like that, which led me to all these things that piss us off, and that's all right though. But
yeah,
and kind of one thing that would piss people off is the exact opposite of what you do for your clients is clients that have unrealistic expectations. And that could be that you could magically get rid of their tax if no matter what, or that they could drop they shouldn't be dropping their stuff. They upload their stuff into your portal and 3 hours later it's done, or just any type of unrealistic expectation and we enable that,
yeah,
so you as a tax preparer community, you need to figure out if we have a formal process for bringing on potential new clients, and we did pause on new clients all of 2022 pretty much. We're only going to bring on 20 this year, which would be, for our size firms, not that many. But what I'm trying to do is I'm figuring out what are the things that are going to piss me off with this person before they can piss you off. You start,
Yes, yes.
and that's the discovery meeting, and it's really a two-way interview.
I absolutely agree with that. I think for me, that has been the number one thing where I talk to clients. And I've certainly, made some mistakes in the past where I've onboarded clients who, and for me, this is the red flag. I don't know if you agree with it or not, but for me, the red flag is when the potential client just wants to jump in and they're like, I'm ready to start my life over. I'm ready to nail the financials. I'm ready to understand everything. I'm ready to do this. Let's do it. Whatever it costs, let's do it. I've had two clients like that and it didn't end well, meaning I had to part ways with them, actually three clients like that, because they were ready to jump in, but they actually were not ready to actually do the work. Like
Mm-hmm.
it's not me doing all the stuff for you. There is for concierge service some things, but when you're running a business, for example, which is my specialty, I only work with business owners and then their personal taxes and stuff. But I can't fix your business. You have to be coachable. You have to actually implement what I tell you. If you don't, I can lead you to water, but I can't force you to drink. And so I've had those situations where I led them to water, but they didn't want to drink, and then they blamed me for not
Mm-hmm.
leading them to the water.
And I would bet those clients, when you did the discovery meeting, they were probably pointing fingers at other people coming into it.
Yes,
So if
yes,
they're in a bad situation, what I'm trying to listen, what I'm always listening for is, why are we talking? Why are you coming to me? Is it like I did a discovery meeting earlier today, or the day we're recording this, and it was, I grew out of my accountant, my CPA. I bought 4 vacation rental properties over the last 2 years. They said that here's the draft of my return, but they're not confident in it. I'm not kidding you. I found over $100,000 worth of tax benefit, over $450,000 worth of cost segregation study. These people are rep status, over 21. He had the sense to not file 21, even though he's late and he's going to have a refund in 21 and 22. That kind of person, you nailed it. Coachable, appreciates our knowledge and our expertise, because they've, now if he came in here, my accountant doesn't know anything, and I did this, I did that. And I'm also very quiet. I slide into the question of, how do you keep a track of all these rental properties? Because they're like, oh, I need QBO, I need Stessa, which is a software specific to the rentals. I need quality spreadsheets. I need something, or else no deals.
yeah, absolutely. Well, one of the last things that I want to ask, or I guess throw at you a little bit, you know, enrollment in accounting is really down, which is a concern. And so, it's interesting. I don't know about your firm. I'd be curious to learn because mine is certainly different. Um, I had a conversation with somebody over LinkedIn this morning, and I didn't ask them, we just had a conversation. He mentioned something like, right now the biggest challenge in my firm is that finding the right staff or qualified staff or something. And I'm like, yeah, because if accounting enrollment is falling, the new generation doesn't want to slave for an accounting firm, even for the name, even for the big firms. They don't want to do that because it's slavery. It's like you're working 24/7. You kill your health, and for what? And I didn't tell him all of that, but anyway, he said, oh, I had a bright star, and then her husband started being weird. That's the word he used. Started being weird because he didn't want her to work so much on the weekends and the nights. I'm like, listen, I'm with her on this one and with her husband
Mm-hmm.
too.
I would say that. So I would agree. Our biggest challenge is staffing and capacity. So that's why we really put the brakes on. We are working on, at least for us, we're working on really trying to find younger people and new to the profession, maybe not even younger, but just someone newer to the profession, and help coach them on our proprietary tax planning and strategy processes so that they could take on some of that capacity. And we're in it's so easy to compete once you find your niche. Like and I know you have a very boutique, we're only 6 people in our practice, or 6 people on our team right now, maybe 7. I don't know. Maybe I'm not counting, but so it's much hard. So we're very particular about clients, and but it's hard to develop people. And I think as we're CPAs, I think we need to get out to the younger people and understand like how dynamic our jobs are. My kids, when they were young, probably thought I sat behind a desk with a pencil protector all day. I'm like you, but we are working with high achieving people, making a huge difference in their life and helping them reduce legally and ethically the tax they pay in their lifetime. Yeah. And not only that, but enabling them to pursue other things and be their counselor and be their partner. That's fulfilling. And I think that if younger people saw that more, that would be great. And so it's tough. I am worried about our profession, and but I hope that I do have some hope. I mean, I've met some younger people. I'm involved with my former home state of Michigan, and in here in Tennessee, in both state CPA societies, on attracting younger people and figuring that out. And I know maybe there's some type of I don't know what the answer is. I wish I had it. I've got some ideas, but we do need more people in this profession. I promise you. Yeah, does it stink a little bit in the beginning? Maybe, but we also need to have a better work-life balance, and I think that bringing the younger people into those client relationships, not that they're going to run the meeting, but understanding the why they're doing something, really helps them feel like, okay, what I'm doing makes a difference.
Yeah. Well, as we wrap up here today, share. I mean, of course, the links to connect with you will be posted under this video if you're watching on YouTube, or in the show notes if you're listening on the podcast, on the audio podcast. But what's the one best way to connect with you? Is it email? Is it website?
The best way would be to jump into our private Facebook group. It's called Defeating Taxes. If you're on Facebook, you just go to defeatingtaxes.com. It's a private group, but answer a couple questions, make sure you're not a jerk, and jump in. We've got a lot of cool resources. That right there is a community that we're in the process of building up. And I'm one of the moderators, and I'm there quite a bit. Or you could just, if you Google Teaching Tax Flow, we will come up all over the place. We've got or teachingtaxflow.com. There's links to all of our stuff, all of our social media. Really, when someone's coming into our community, I like to have them start with just the free content. So, the Defeating Taxes Facebook group, some of our social media content, and then our podcast, Teaching Tax Flow. That's the best way to find us and myself.
Awesome. And the last question I want to ask you, I usually ask all of my guests, it's if you could go back in time and tell your younger self one thing, what would that be?
I love this question. Last time someone asked me this, I was live on a podcast and I actually puddled up. So, and a good thing I wasn't on video. But my answer is the same. Trust yourself. Always trust your gut. Understand that if you want to see your future, look around you. Who are you hanging around? Who are you pouring your time, your talents, and your energy into? And those relationships are very important. But always trust your gut instincts. And don't wait. Don't be super impulsive, but don't wait on the sidelines. Get out there and play.
Awesome. I love it. All right. Thanks so much, Chris, for being on the show. It's been a great pleasure to talk about the geeky tax stuff that pisses us off as accountants. It's been really a pleasure. Thank you.
My pleasure. It's an honor, and have a great rest of the day.
All right. And for those of you who are watching or listening, thanks for being here for this great episode of Talk to Tatiana, and I hope to see you next week.